Commercial Qualified Trust, CQT. By DeMello Inc. About CQT. Remove all incidents of ownership but retain absolute discretionary control over the assets. Own nothing but control everything. Wealth creation through asset protection. CQT becomes your second money flow without additional work. The benefits as to why CQT is acquired, never sold. Assets in CQT are immune from civil lawsuits. Like an escrow account. Tax deferment on capital gains but no RMD at 70.5 years old. CQT makes real estate's 1031 exchange obsolete. You have liquidity like your checking account. You can engage in business with pre-tax dollar anywhere in the world. Medicare and Medicaid compliant. No effect on government entitlements such as your Social Security. Eliminates probate and associated expenses. You have full discretionary power. Eliminates inheritance tax regardless of value. Legal in all 50 states and in full compliance of the IRS code. Why CQ Trust is the premium best and that makes CQT the cheapest. No Secretary of State registration. No state charter. No separate registration in other states you do business. No annual fees in other states you do business. No prepaid franchise taxes. No annual meetings or minutes books required. No annual renewal required and no public discourse. No CA statutory fees and commissions. Not found in public databases. It is invisible. The 4 conventional strategies to defer or reduce capital gains taxes in real estate and portfolio. The 1031 exchange. You are under a lot of pressure to find and name a new property within 45 days. You lose control of your money to an accommodator. Additional cost. Use passive portfolio losses to reduce capital gains taxes. You have to lose in order to win? Installment sale to stagger capital gains tax payments. This is risky and cumbersome to say the least. Give it to charity. CRT. In exchange for tax-free income stream. After death, the income stops and all goes to charity. Just know that you re-depriving your heirs their rightful inheritance. CQ Trust is a house flipper's dream instrument. No 1031 exchange. No accommodator. Buy a house with pre-tax dollar, then sell the house with capital gains tax deferred. How does the IRS view CQ Trust relative to taxes? The IRS sees CQ Trust as the best facility for conduit taxation. CQT generates economic activities where the IRS collects taxes. How do you protect your business from civil lawsuits? Make it own nothing, by leasing everything. If the business owns nothing, it cannot pay civil liability claims. How can you protect personal assets from civil lawsuits? Own nothing, but control everything. If you own nothing, they can sue but they cannot collect. Why you should move to eliminate civil liabilities. NCSC reports about 16 million lawsuits are filed every year or 1 new lawsuit filed every 2 seconds. NFIB report. Small businesses take in 22% of revenues but pay 81% of liability costs. Being a small business is a magnet for frivolous lawsuits because 96% will rather settle than fight. A very expensive litigation. Your automobile is your most litigious asset. It is the fastest conduit to your assets or wealth. Umbrella insurance coverage is often not enough to cover a civil judgment. Too many civil lawsuits based on vicarious liability. An owner is held liable for the tort action of another. CQT is utmost in anonymity and is lawsuit-proof by operation of law. CQT implements as a commercial deal. Device. CQT is a management tool. CQT can defer capital gains taxes indefinitely. CQT eventually functions as a wealth conveyance instrument. Powers of CQT trustee: power of sale, power to lease, power to loan and invest, power to manage securities, power to hold securities in name of nominee, power to insure, power to borrow and hypothecate trust assets, power to retain or hold trust property in name of nominee, power to invest, power to determine principal and income, power of distribution or division in kind, power of termination in trustee's discretion. The further the control of your asset moves away from you, the riskier and more expensive it becomes. Did you know that you can be sued by your foreign trustee or custodian? Do you really want to be dealing with foreign government officials and agents? Not to mention the FTC. How will it work for your local real estate holdings? It's just essentially a bargaining tool against a plaintiff and not for total asset protection. What you're really asking about is value. What would be the lifetime value to you of a lawsuit-proof wealth? The lifetime value to you of the ability to defer capital gains taxes indefinitely. The lifetime value of number 1 and number 2 to your heirs or beneficiaries. Thank you.